welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we're going to take a hard look at the recent announcement of the government on the MSP, the minimum support price. What does it mean for agriculture, the food economy, farmers, consumers, inflation, the fisc, and ultimately economic growth? And joining me in discussion are two stalwarts and former bureaucrats who, post-retirement, opted to dirty their hands, use that phrase, with real work at the grassroots level in the agriculture sector, a sector with which they had long association during their days in government. I have with me Mr. T Nanda Kumar, former Agriculture Secretary, Food Secretary, Government of India, who then went on to head the NDDB, and Pravesh Sharma, who took early retirement from the government, from the hallowed IAS, if I may say so, to launch an agri-startup. So welcome to the show, Mr. Nanda Kumar and Pravesh. The government's recently announced a 15,053 crore procurement policy, ambitiously called PM's Asha, which allows states to choose from three schemes: the existing Price Support Scheme (PSS), the newly designed Price Deficiency Payment Scheme (PDPS), and pilot of a Private Procurement Stockist Scheme (PPPS). That's enough of P's and S's to undertake procurement when prices of commodities fall below the MSP level. The idea is to ensure remunerative price to farmers. While it sounds very good on paper, does it really mean anything at all on the ground, given that even the present scheme is extremely patchy, and that too after years of implementation? Under the present MSP, the government fixes the rates for 23 notified crops grown in the Kharif and Rabi seasons. But we all know that's really only mostly on paper. So let me start with you, Mr. Nanda Kumar. What are your expectations from the new schemes that the government has announced?
Well, to begin with, let me say this is an innovative scheme, but it has its own problems. I would like to see this in two different contexts. One is the traditional procurement pattern of wheat, rice, and cotton and jute, which could be offloaded in the market either through the PDS or some other system. So marketing was not a problem. When you get out of that and coming to these new commodities, I think the big challenge will not only be procurement, but marketing. Because if prices really are going to stay below MSP, all these innovations will end up in making huge losses. And whosoever has entered either a price support scheme or any other mode of procurement has had problems in getting back the deficit from the state governments or the central government, which means these amounts which are shown as guarantees would of course enable them to start the process, but I am sure at somewhere down the line the whole operations will get choked.
Yes, that really is a problem. In India, we start many things but then don't know how to proceed. In fact, Pravesh, I'm sure you'll agree with that, because less than 7,000 crores is really spent this year. Isn't that just a drop in the ocean for what we want to achieve? In fact, the PDPS, the Price Deficiency Payment Scheme, has been modeled on the lines of the Madhya Pradesh government's Bhavantar Bhugtan Yojana. But will that only meant for oilseed farmers? As a former bureaucrat from the MP cadre, how would you rate the performance of the MP scheme? There is a view that it hasn't benefited farmers much because traders collude to keep the prices low, and ultimately it's only the poor taxpayer who always ends up picking up the tab. Also, why do you think it's limited only to oilseeds, and that too only to 25% of production? Does it really make a difference, Pravesh?
So I'd like to also see this entire Asha scheme in two segments. And for me, the signaling aspect of the scheme is far more important than the practical implementation aspect. You see, what I think the central government has acknowledged tacitly and perhaps not very explicitly is that market prices and MSPs are misaligned. But you have a commitment to ensure a certain return to the farmer. That's a political commitment. Every government has its own vision of these sectors. Now, I believe that the introduction of the price deficiency scheme is the real game changer in this entire set of three schemes. I would perhaps disagree with you when you say that the Madhya Pradesh Bhavantar scheme was a failure. I think that's a too sweeping judgment. I had traveled extensively in MP, not of course as a civil servant. I had left the civil service, but I traveled extensively and saw the operation of that scheme on the ground. And let me say that I think the scheme was a big success in two significant ways. One, there was a significant increase in the arrivals in the market. So if you look at the arrivals in the previous year and in the year the scheme was tried out, there's almost a 50% jump in arrivals in the majority of the markets. Now, it is true that in some areas there was suspicion. Mind you, suspicion, nobody could ever prove it. And in fact, when data was compared to other states, I don't think that this collusion thing can really be borne out. So for me, the signaling of the government is far more important than the actual rollout, which of course will take time to streamline.
Okay, the problem only, Pravesh, is that signaling alone doesn't really achieve very much. But if you say that was a success, I'm willing to accept it because you would know at the ground how it worked. But Nanda Kumar, the fact is that any kind of procurement presupposes the availability of not just a working mechanism to procure, but also a marketable surplus. And it essentially benefits only the better off farmers, not the vast majority of our farmers who are essentially subsistence farmers. In such a scenario, wouldn't an income support scheme be better? Because now we do have the technology which allows you to identify those who are genuinely needing, and there's not much scope for leakage or misuse. Nanda Kumar?
Yeah, an income support scheme is always a better option, but I think having committed this into a procurement model and having committed that MSP will be A2 plus FL plus 50%, I think the government has to find something innovative. Now, the argument that the marketable surpluses could be limited by the propensity to consume would apply only to cereals. It won't apply to maybe the pulses or oil seeds, because I think most farmers would sell the whole thing in the market. But to me, the real challenge is the infrastructure. Now, even after so many years of procurement of food grains, you still have complaints from places like Bihar, Bengal, Assam, that procurement is not up to the mark and farmers are not getting MSP. So I think many state governments have not really put in place a mechanism for physically procuring these stocks. So PSS to me is really not going to make a huge difference. And as Pravesh said, is this price deficiency payment system going to work? Well, then the choice is a direct payment to the farmer or a price deficiency payment, which is a better option, which is an easier option. I would think a direct support payment would be a much better option.
Yes, indeed, because we'll have to decide which is the best mechanism, because Pravesh, the government is committed to doubling farm income by 2022. But given that agriculture is a state subject, what is the role that the union government can really play to translate this into action on the ground? Increase investment in agriculture infrastructure, rural roads, irrigation, warehousing facilities, providing access to better technology, agriculture extension. But all this should be primarily the responsibility of the state governments. Would you not agree, Pravesh?
That's true, given the fact that agriculture is a state subject. But let's not forget the fact that the central government puts out very huge outlays in the form of subsidies on inputs, on other kinds of services in agriculture. So the central government is very much a player. It's also a player for two other significant reasons. One, the entire role of the private sector in marketing in agriculture is controlled by two key handles which only the central government controls. One, the provisions of the Essential Commodities Act, and B, by the external trade policy. Now, I see this whole ASHA working only if the government of India is also willing to head-on address these two key, I would say, challenges. Are they willing to dilute the provisions of the EC Act as happened during NDA-1 during Mr. Bajpayee's time, which saw significant participation of the private sector in direct purchasing in the mandis and beyond the mandis wherever the states allowed it? And two, are we going to take a more liberal stance on external trade? And when we talk about external trade in food and agricultural goods, we're not just talking about liberalizing exports. We will also have to finally bite the bullet on imports. So if the state governments are to be incentivized to liberalize marketing at the mandi level and within their purview, the central government will also have to play its part in tackling issues like the EC Act provisions and external trade issues.
That's very true, because you will need cooperative federalism in the true spirit in the case of agriculture. In fact, Nanda Kumar, if you look at agriculture's performance, it has performed fairly well in the past few years. If you look at GDP growth in agriculture, yet farm distress has evidently grown. Why? Why is it that farmers seem to lose out even in good years, bad years? It makes no difference. Farmers are always in the receiving end, or is that just a misconception?
No, I think what we haven't got right, as Pravesh says, is the marketing component of agriculture. All that we talk about is production, because I think we came from a background of food scarcity or scarcity of some kind or the other. So the entire focus in agriculture is how do you increase productivity, how do you increase production. Now we've had breakthroughs in many crops and many vegetables and fruits in terms of production. But have we got our infrastructure right? Have we got our marketing right? Probably no. We still believe that a small price rise is dangerous for the consumer, and then we bring in the Essential Commodities Act, we bring in restrictions on exports. I'm hoping that the new draft policy on agri-exports which the Commerce Ministry is working on would clearly lay a roadmap and say, okay, the next 10 years, this is the predictable kind of a policy for exports. And it will not be a knee-jerk kind of stop, start, because you can't build a market, you can't build a brand, you can't build credibility if you have a stop, start kind of a policy on agri-exports.
Oh, absolutely. Stop-start policies are bad everywhere, not just in agriculture exports. But I'm afraid it's time for us to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with two experts in the agriculture sector, former bureaucrats who are now trying to do the real game. Discussing the MSP, what does it mean for farmers, for consumers, for agriculture, the Indian economy in general. Pravesh, before the break, you were talking about how, we need to get two essential acts correct, the ECA as well as export policies. But the question is that how do governments really balance the interests of consumers and farmers? There is a view that farmers suffer, as I said, in good times as well as bad. In good times, prices fall, and in bad times, they suffer because of the decline in output. And, if you look at the inflation in August, it was just a low 3.7%. And this was driven mainly by the sharp fall in the prices of several food commodities. A 7.8% fall in the case of vegetables, 7% in pulses, a 5.5% decline in sugar. In fact, consumer food price inflation was a mere 0.3% in August. And when the price of food grains falls, is that good news or bad news for farmers? Or do farmers lose out as producers and gain as consumers? Since most farmers, as I said, don't have really a significant marketable surplus. So what do we do, Pravesh?
So it's quite correct that the so-called larger agricultural economy seems to be in some serious distress. There are several reasons for this. I think we don't have time to get into great details, but let me just point out one significant development in the last, I would say it's happened over the last decade and a half, maybe 2 decades is the right period to look at. Today's agriculture is largely responding to market signals. It's not an agriculture which is policy driven, it's a market driven agriculture. And I'll give you one statistic to back what I'm saying. 20 years ago, if the total value of the agri GDP was 100 rupees, 75 rupees came from grains, oilseeds, pulses, and 25 rupees from what is called high value agriculture goods, horticulture, dairy, poultry, fisheries, meat, etc. Today it is the reverse. So over the last 20 years, as people's eating habits have changed, as the demand for cereals has fallen, and commensurately the demand for horticulture products, poultry products, dairy products has risen, farmers have responded by adopting different categories of goods for production. The problem is that policy is still largely aligned towards the food production system of, let's say, the 70s and 80s. But the truth is we are at least at a macro level surplus in food. So where we are erring, as Mr. Nanda Kumar said, is in building a modern marketing system which is perhaps answering the needs of the new age demand. What we are lacking is even basic infrastructure at the farm gate to collect efficiently, transport and market goods like horticulture products. Dairy is okay, at least in some parts, but not all across the country. If you leave out Gujarat, Rajasthan, maybe parts of Punjab, UP and Maharashtra, in the rest of the country, organized sector barely has a share of 15% in the dairy sector. We need to increase this. We need to increase the participation of the private sector in sourcing fresh produce from the market, so that instead of wasting 25-30%, which is the average today, we bring it down to closer to international norms, which is 5 to 7%. And this has been done in our neighborhood in countries like Sri Lanka, Southeast Asia. So by doing that, you will be transferring further value back to farmers, which then incentivizes them to adopt new technologies, to adopt higher productivity generating practices. Unless the market is organized from the front end right up to the farm gate, we are not going to be able to see the significant reduction in farm level distress.
That's very correct, because policy really hasn't kept pace with the changes in agriculture, and marketing remains a big Achilles heel. I'm sure you'll agree with that, Mr. Nanda Kumar. But the fact is that for all the concern that successive governments evince for farmers, when it actually comes to choosing between farmers and consumers, it's always consumers who win. Also, we often bemoan the fact of poor implementation. But could the latest MSP scheme be one of those rare instances where poor implementation might actually be a good thing? Because if we were to implement the new MSP scheme with even a modicum of success, it would have a huge impact on food prices and hence on overall inflation. So my question to you is, will the scheme as announced have much impact on inflation? Because that's the fear of many macroeconomists.
Well, once you agree on MSP being A2 plus FL plus 50, you've already placed a benchmark. So I suppose when you do that, you have already taken into consideration what impact it will have on food inflation, and therefore food being the grandmother of all inflations, and what will happen to the rest of the inflation cycle. So you are hoping that bad implementation would help you control the inflation. I think that's bad policy, if you ask me. But let's also look at something different. I'm going back to what Pravesh said. There are 23 commodities in what we are talking about, MSP and inflation. But what about things like milk, horticulture, high value, other products, which are not covered by any MSP regime? These constitute, I think, more than 50% of an average Indian's thali. So I suppose we have to look at agriculture in a different way. In fact, if you go back to the Green Revolution, one of the important things that Punjab and Haryana and then the state of Punjab did was to build roads, build mandis, build warehouses. If that was necessary then, I think it's much more necessary today. And let's look at a simple example of poultry. The poultry growth in India has been driven primarily by the private sector. They've created contract farming models, they've created marketing models, they've created input supply models, they've created a private veterinary service model. Look at dairy. Well, it's not private, it's driven by cooperatives, not so much by the government. Again, the model is roughly the same. I suppose we have to learn from these two success stories and look at the entire agriculture in the context of what is now being said, we want to double farmers' income. And farmers' income cannot be doubled unless we look at what the farmer does, where does his earnings come from, and what do we do to get it right in terms of markets.
Very true, Mr. Nanda Kumar. And Pravesh, you also talked about how policy is still stuck in the past as far as agriculture is concerned, because in fact all the measures that we're hearing even now are really about tweaking the same model, subsidize inputs and then exercise control on output prices. When will we be able to unleash the kind of market reform that we saw in industry in 1991? That is, allow market forces to operate both on the input and on the output side, which means doing away with subsidies on power, fertilizers, creditors, and then allowing farmers to benefit on the upside when prices rise without imposing import control, whether on exports or stocking, etc. You have been in the president of the Small Farmers Agri-Business Consortium. So let me ask you, what do farmers really want from the government? Do they understand all this, or do they want more subsidies at the input stage and more restrictions at the output stage? Are they open to the idea of market-based solutions like crop insurance and no interference from government either on the input or on the output side? Are farmers ready? Pravesh.
Well, obviously it will be facetious to give you one answer and speak on behalf of farmers. I obviously don't represent any constituency. But I would say with some confidence, having spent I think more than 2 decades in agriculture in my civil service career, and of course in the last 3 years with this startup, you see one thing which all producers, irrespective of whether they are industrial producers or producers of services or of agricultural goods, what they want more than anything else is the freedom to choose. And I think that's a fundamental right of anybody who's taking a risk of production. Now, we seem to have accepted that producers of industrial goods and services need to be given complete freedom in the choice of technologies, in the location of their operations, in who they want to sell to, how they want to price their product. But we don't seem to have yet adopted the same principles for agriculture. So everything from input to output is heavily controlled. And as you said, in 91, we somehow, believed that agriculture was not ready for the kind of reforms that were being planned and implemented over the next 2 decades in the other 2 sectors. But as I mentioned earlier, the market in the meantime hasn't stopped for anybody. The market has continued to change. People's food baskets, food preferences have changed, and farmers are responding. What the government needs to do, and I again go back to my original assertion, that I believe that this scheme is giving a very interesting signal on behalf of the central government. And even though, of course, we still don't have the outlines of this role of the private sector in MSP, but what the government of India is very clearly telling the states is, you cannot manage to transfer these kind of prices to farmers only on the strength of direct procurement. You will have to choose an intelligent mix of instruments, including price deficiency, including the use of the private sector. And of course, this is not going to happen in one marketing season. And you mentioned earlier, why limited to oilseeds? I think that's very sensible, because you need to pilot in one perhaps not so sensitive commodity. And I think you need to absorb the lessons for replication and upscaling in the coming seasons. The full, I think, rollout of this scheme I see happening over the next 4 crop seasons, which means over 2 calendar years. And it's only with the process of internalizing the lessons in each marketing season that the scheme can be honed, and we'll probably see its final shape in about, I think, sometime in 2020. That's my feeling entirely, of course.
I hope you're right on that. Mr. Nanda Kumar, do you agree that the Indian farmer is really ready to deal with the vagaries of the market like Pravesh says? And since we're running out of time, very quickly, if I could ask you, what are the 3 most important things that the government needs to do to set the agricultural sector on the right track?
I've always believed and argued that the degree of freedom for the Indian farmer is very limited. When we talked about liberalization, I think we just talked about industry, we didn't talk about agriculture. I think farmers are now very aware, they have access to knowledge, information. I think they are ready to take on the challenges of the market. So we could free them up both in terms of markets and in terms of technology to begin with. The second thing I think we need to understand is, when we talk about doubling the income of the farmer, let's look at where all his income comes from. It's not just increasing productivity or saying, okay, more grains per drop of water or per inch of square inch of land. The third is, I think we need to liberalize across the spectrum, and we need to look at agriculture in an entirety. I think we are looking at it still in many silos of seed, of market, of finance, of credit, of insurance, and things like that. I think time that we looked at agriculture 10 years from now, where do we go?
Okay, Pravesh, I'll let you have the last word. What would you like the government to do? Is it all marketing, or is there something else on your wish list?
As Mr. Nanda Kumar said, I think we have more or less solved the production problem, but we have not solved the marketing and value addition problem. Now, one interesting development in the last decade has been the growth of, though very small, alternate marketing networks like the NCDX Futures platform. There is also a small spot, electronic spot market, which NEML, the National E-Markets Limited, is trying to put across. The government itself launched the eNAM a couple of years ago, but has not gone very far. I would say that investing in alternate marketing channels today is the need of the hour. And you asked Mr. Nanda Kumar, you didn't ask me, but I'm going to say it all the same. I would say the 1, 2, 3 priorities in agriculture should be liberalize, liberalize, liberalize. You'll make some mistakes, but you'll also learn. Today, you could perhaps err more on the side of being a little too ambitious, and then you could, depending on the region, of course, what will work in central India may not work in northeast India. We need to tweak it regionally. We need to tweak it for specific value chains. But if you adopt the principle that we need to open up in agriculture, I think many of the solutions will emerge. Of course, they'll take a little time, but I think it's high time we did that.
Okay, so on that note of advice to the government, I'm afraid it's time for us to call an end to this program. But thank you so much, Mr. Nanda Kumar, as well as Pravesh, for joining me and giving such good advice. I hope somebody in government is listening, that the bottom line is open up, liberalize. Don't do what a Trump is doing. So thank you so much, Mr. Nanda Kumar and Pravesh, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.